All right, good morning, everyone. It's an absolute delight to have you here with us this Saturday morning. And of course, for the 2024 Q4 Economic Outlook, Nigeria's Economic Outlook 2025. And of course, there's so much to look forward to today. You want to be well positioned for, all that's ahead. So much has happened this year already. It's been quite the year from an economic standpoint. And it's not even over yet, even though, yes, December might be a sleepy month. But nevertheless, we're already having CBN governor coming out with projections on inflation and FX. We're having the budget with its assumptions and its deficits. But of course, this webinar brought to you by Nairametrics, we hope to focus on the data that is on ground, right? To provide some sort of direction when it comes to the fiscal side of things, the monetary side of things, and how that's steering the Nigerian economy. And of course, there's a larger geopolitics of it or major shifts in world power, right? With the US elections. So how does that affect developing nations? How does that affect Nigeria? Change. So hands down, obviously it's going to affect our money. And we want to know, we want to get the longer end of the stick, right? So there are two sides to a coin. We want to be the heads, right? We want to get ahead. So hopefully this webinar will provide us the insights that we need to do just that. So again, welcome to today's webinar. Of course, we're bringing you the metrics, the insights, the data, the breakdown right here, the 2024 Q4 Macroeconomic Outlook, brought to you by Nairametrics. We are doing this with the help of an amazing lineup of panelists. I'm excited to have them here, and you'll see why in just a bit. But also, we're excited to have you here. You're welcome to keep the conversation going. There's a chat box for you to share, perhaps where you're, joining in from, and obviously opportunities to network. So feel free to engage in the chat box, your responses, your reactions to some of the things that are being said. There's also a Q&A section for you to drop your questions in, and we want to entreat our panelists, right? From history, time doesn't always permit us to ask the questions, in person, but if you can, perhaps if you're not speaking, just go through the Q&A box, and if there are questions you can answer there, feel free to do so. So super excited about today's session. You should be too. Let's get round to our panelists who will be providing us insights and, of course, all that data information breakdown that we need to position ourselves to turn. I like how an infographics from Nairametrics put it, T-pain to T-gain. We have joining us as a keynote speaker, Margaret Olele. She's a CEO and Executive Secretary, American Business School. Previously, she has served as a Corporate Affairs Director at Pfizer for West, East, and Southern Africa. She has 30 years of experience under her belt and has engaged governments across Africa. She's held leadership roles in the food and pharma industries. She's also the host of Business Exchange, How Business Works podcast. It's a pleasure to have you here, Mrs. Margaret Olele. And of course, we're looking forward to, the keynotes that you'll be sharing with us. We also have with us Professor Jeremy Gers. He is the Professor of Economics and International Affairs at HEC Paris. He, of course, a leading business school in Europe. And of course, he's into the global economic order and the intersection of economics and geopolitics. We know that's an important conversation we hope to have right here today. He has contributed extensively to academic journals on international trade and economic globalization. And he provides analysis, as he'll be doing here today, providing us analysis for international, he has before, obviously, provided analysis for international organization. He speaks at global forums and influences the understanding of economics policy and global trade dynamics. It's a pleasure to have you with us, Professor Jeremy Gers. I hope I got that guess right, the pronunciation. But let's move on. We also have with us Dr. Bumi Bajamo. It's an absolute pleasure to have you back with us. She was with us earlier on in the year talking about, CBN's policies and how that's affecting the economy. Of course, there has been, a flurry of other policies that have come through that are and will affect the economy. So it'd be interesting to get an, update on that. Dr. Bumi Bajamo, she's a head of group corporate banking and Chief Operating Officer of Corporate and Investment Banking at EcoBank, EcoBank Transnational Incorporated. She oversees the strategy across 33 countries and representative offices globally. So she also has an MSc from Warwick Business School, a PhD in International Monetary Economics, and certification in Disruptive Strategy from Harvard. Bumi is a chartered stockbroker, economic analyst, and community leader. It's not over yet, right? A very rich lineup of panelists we have joining us today. You do not want to miss any part of it. And of course, feel free to share, with your community as well, so that they can join in and, the positioning goes round. We also have with us Dr. Olusegun Omishakin. He is the Director of Research and Chief Economist at the NESG Nigeria Economic Summit Group. That's a big deal. Dr. Olusegun Omishakin. He leads initiatives addressing economic challenges at subnational, national, and regional levels. He has 18 years of expertise in strategic leadership. He has overseen over 600 research projects, fostering collaboration between the public and the private sector. PhD in economics, and is recognized for applying economic theory to derive reforms and development. Let's see if those theories actually work in Nigeria. But it's interesting to get your analysis of some of how the theories are working out, playing out in the Nigerian economy. Dr. Olusegun Omishakin, it's great to have you in. We also have Mr. Eji Akpata. He's a founder and chairman of Skymark Partners Limited, a 15-year-old investment firm that specializes in securities trading, private debt, venture capital, real estate. I mean, that's investment for you. He's also a director at UCML Capital Limited. He has 25 years of experience in real estate, investment banking, and has closed transactions exceeding 2 trillion naira. And of course, his career spans roles at Ernst Young, UBA Capital, amongst others. It's an absolute delight to have Mr. Eji Akpata here with us. I am not done yet. I mean, it's just amazing how rich the lineup is here today. Up next, we have Amanda Wolverton. She's a global marketing executive, award-winning, I beg your pardon, marketing and communication leader and executive, extensive global experience in high-tech industry. She's held leadership positions in, strategy development, marketing and communications in Microsoft, Ericsson, Bloomberg, amongst others. She currently serves as an advisor to the Economic Corridor Initiative and a consultant to deep tech startups at Creative Destruction Lab, while participating in the EMBA program at Tech Paris. Absolutely delighted to have you with us, Amanda Wolverton. And finally, we have Mr. Kelvin Emmanuel. I'm sure you would have seen him on TV or his tweets, on social media, very informative insights on what's happening in the economy. But he's here with us today to also share his perspective. He's an economist, a public policy expert, and financial markets analyst. He began his career in 2009, so he's been around for quite a while, following and tracking the economy. In 2011, he founded and led the Nigerian office of ACM Gold, a South African firm. He played key roles in launching the first FX conference for the OTC CFD industry in Nigeria in 2014. He's contributed to various fiscal strategy papers, including for Cross River State. And right now, he was, in this year actually, he was appointed to the Presidential Committee on Fiscal Policy and Tax Reform. It's an absolute pleasure to have you with us, Mr. Kelvin Emmanuel. I mean, you know what to expect. Do you even know what to expect? There's so much that will be shared today, and hopefully it will all come together to help you position yourself to make the most, whatever the policy directions are saying, whatever the data is saying. This, of course, again, in case you missed it, is the 2024 Q4 Economic Outlook, brought to you by nairametrics. Exchange rates, interest rates, economic growth, geopolitics. We are going to get that covered here today. Right now, I'm going to hand over to the founder, the CEO of nairametrics, and the chief host, Mr. Ugodre, to give the opening remarks.
All right. Good morning. Mic check. I hope everyone can hear me.
Yes, we can.
All right. Fantastic. Thank you so much for that, Joanna. Good morning, everyone. It's an absolute honored to have this set of panelists here. I mean, Joanna's just reeled out, the CVs and the makeup of people we have here. And this was deliberately done because of the nature of discussion I wanted to have today. Again, my name is Ugo, and we do this every quarter for those who are just joining for the first time. So this webinar is done once every quarter, just to give you an idea of what the economy looks like in Nigeria and what to expect in months to come. By the way, we also talk about geopolitics, so that way we tend to cover even what happens within the sub-Saharan African region. So it's been a very amazing 2024 for a lot of people. We've heard all sorts of things. Oh my God, we've gone through so many things in Nigeria and to a large extent, even in sub-Saharan Africa. I mean, we've had to deal with, or we're dealing with inflation, high inflation, we're dealing with low GDP growth rates, we're dealing with possible higher taxes, fuel subsidy removal, all sorts of stuff that we've gone through in 2024. And guess what? We did discuss these things last year when we did the webinar projecting into 2024. And we did also explain some of the things that you ought to be doing. I hope you took some notes back then. Of course, we're also going to be talking about Trump election, November 5th this year, if I'm not mistaken. The world woke up and were like, oh, looks like we're going to have a second Donald Trump presidency. And so what does that mean for us? And that's why we have two amazing panelists here to sort of give us insight into that. And of course, we're now going to discuss expectations for 2025 for Nigeria from an economic standpoint and what that means for all of us. So here are the key things that I want you guys to know that you take away. What does America first mean for Nigeria? Will fuel prices fall next year, or will it continue to increase? I think the panelists are going to delve into that. Will Nigeria benefit or suffer from the sort of tax reforms that we're seeing? Take notes. You're going to hear interesting nuggets from that setup. Of course, what should we be investing in 2025? Should we be investing in real estate, or should we be investing in stock market, or should we just focus on fixed income? You're going to hear a lot of nuggets today. And of course, when you're in a very volatile environment, interest rates tend to go up, things tend to be a bit volatile. What should you be hedging against so that you don't end up carrying the bag? We're going to discuss all of this today, and I'm so glad we have this amazing panelists. I don't want to talk too much because there's so much to talk about, but let's just go right into it. Joanna, thank you very much, and hope you guys have an amazing session. I have my notepad already because I'm going to take in a lot of nuggets myself. Thank you very much.
Yes, definitely an amazing session it will be. As you said, we had this session last year. If you took notes, you would have perhaps thrived very well this year. But if you didn't, sorry, here's another opportunity ahead for 2025. Make sure you are taking notes. Up next, of course, to give the opening, I beg your pardon, to give the webinar presentation, we have the CEO and Executive Secretary of America Business School, Mrs. Margaret Olele, for the webinar presentation.
Hello, can you hear me?
Yes, we can, Ma. Go ahead.
Okay, great. So it's a great pleasure to be here. And Joanna, called my organization American Business School, but that's fine because even at the council, you keep learning things. So one thing that's been very keen, people have been very keen to hear, is the U.S.-Nigeria bilateral relationships, and looking at it from the lens of the new government coming in. Ugodria has talked about how do we exist in Nigeria, but even in the continent from an American first perspective. And so I would say that just like every other conversation, people get, there's always a bit of trepidation when change happens. But we also know that FDI is not largely driven by a government-to-government relationship, but also something that thrives, from a strong private sector lens as well. So we want to look at how, is the U.S.-Nigeria relationship from a private sector lens. And by the way, the American Business Council is the American Chamber of Commerce, and we have currently 91 members. So we know that the U.S. is a natural trading partner to Nigeria. Notwithstanding, I know that I saw something that nairametrics put together that the U.S. is number 5. You have companies that have been in the country since the independence of Nigeria. An example is an organization like Coca-Cola that has already committed to investing in $1 billion in the next 5 years, considering a stable investment environment. You also have the membership that has been growing steadily in the last 7 years by double digits. So we are seeing, more U.S. companies, come on board to Nigeria. As opposed to what we all have heard about, a couple that have left. We also know that these companies contribute significantly to critical areas of the Nigerian economy. And one of the areas that are of key interest are the unicorns coming out of Nigeria from a point of view of, the impact on even the Nigerian economy. We know that most of these unicorns have significant interest from the US. And one interesting area is that we start seeing a trend that we felt that it was important to build what we now call an associate category, because we saw the increasing number of Nigerian tech startups that are also registered in the US, so over 60%, paying taxes also to the US government. I'll get back to this because this is important from an American perspective. And the U.S. Chamber of Commerce that we are an affiliate to has it's really the largest private sector organization in the world, but it also has a center that's dedicated to the U.S. African trade and investment relationships. And ahead of what we have seen as a growing situation in terms of relationships, a set up work that that's going to drive that relationship in 2025. So these are some of the things we are seeing from the private sector lens. What are we seeing from the U.S. Government and relationship with Nigeria? This year, the two governments rolled out a binational around April 29th, 30th, and a couple of those areas talked about the growth and the areas of interest, including areas that are critical to us, like in the tech space. There is also a $1 billion US development humanitarian in the humanitarian and security area, growing 1 billion annually. The commercial investment partnerships that had just been signed this year as well, with focus on the infrastructure, agriculture, and digital aspects of the Nigerian economy. So there's quite a bit, happening. And then I would say, looking at this from an American first perspective, the Nigeria currently through the US currently through the DFC have like $250 million portfolio of the DFC in direct loans, loan guarantees, and other financing support in Nigeria. The American first approach is not going to walk away from funds that they have invested into a country. So having said that, we know that even the US is the highest non-African investor into the AFDB. And since we've seen a lot of growth in terms of investment in various African projects, with commitments for such growth. Recently, and that was just as recent as Friday last week, the formal, because he just left, the Consul General of the US celebrated the growing impact and the increasing trade volumes, from $10 billion to 11.3 over the past year. So we see a lot of things happening in terms of growth. We are very conscious about time, but I'm going to share some few scenarios. And these scenarios came from series of conversations we had before the elections and what we were beginning to see or what people have been talking about. And so people believe that, the Trump administration would be a bit more transactional, prioritizing on the economic and security interest over the democratic promotion. So from what our conversation here, we see a lot more, we'll see those interests. And so they would say that the administration is not completely alien on economic priorities that may benefit Nigeria. So when we look at Prosper Africa as an example, was established in the first coming of President Trump. And since its establishment, it's closed over 1.52 deals, 86 billion in exports into the continent, and has impacted 49 African countries. When you also look at the America First policy that would say would increase tariffs on imports, raise trade barriers, maybe negatively impacting Nigeria exports to the US, and the fear that the AGOA, which is some lifeline that a lot of African countries are holding in terms of trade relationship with the US, there's the fear that this may not happen because again, it's expiring in 2025 and needs to be renewed in a sense. So there's a fear that the administration may reduce or renegotiate the engagement. But I would say that looking at this from the administration stands against the having an anti-China approach or outlook towards the way that administration may be perceived, may create a more robust defense policies for U.S. private sector or government-funded projects against China's incursion into Nigeria, which means that if there are investments that are already in, if you have a couple of private sectors that really are driving and pursuing government-funded businesses, we see, or at least there's a strong perception that the Trump administration would wade into this warfare in the favor of U.S. private sector. So overall, I would say that it's not all doom and gloom. I would say that it is also an opportunity for Nigeria to step up. During the first coming of the Trump administration, I joked about the whole conversation around calling Africans living in huts and all. And I was like, you know what? We need to upgrade our huts. So we need to step up as a formidable trading partner. Because if your platforms are great, if you have great economic fundamentals, which is what we're talking about today, then investors would come, private investors would come, and by extension can pull in a government that is out there to protect what US businesses, US investors, US cultures. They would step up. And so these are my quick thoughts, and I'll hand over to Joanna. Over to you.
Thank you very much, Ms. Margaret Olele, the CEO and Executive Secretary of American Business Council. It was a pleasure getting your perspective there, especially with, that's what's basically going to kick off next year, 2025, Trump being sworn in, his second coming. And you've highlighted, of course, that America has been the top investor in Nigeria since 1970-something, if I believe. Will that change? We'll see. The America First nature of his policies, we will wait and see. But thank you so much for that. It's not all gloom and doom. We're going to get into the meat of the matter. Of course, we've had the opening presentation there from Mrs. Margaret Olele. We're going to get into the meat of the matter. We have those heading the panel discussion joining us, of course, here with us. I'm going to hand over to Laddie, Williams, and Faith. Good morning.
Good morning, Joanna. Thank you so much. Yeah, that was quite a great presentation there from Madame Olele, and I'm technically upgrading my own hut right now. I'm not going to leave it the way it is. All right, so let's get into the conversation right now. I'm going to be talking with Professor Jeremy Gers, and I also have here Amanda Wolverton. So I'm going to kick off with Professor Jeremy. So it's great to have you, Professor Jeremy. So yeah, we're talking about Trump's America First, and America First might mean different things to different people. So I'd like to get your perspective on what America First really means.
Thank you. Thank you very much. And thank you for having me. And thank you for this great first question. What does America first mean? Well, let me put it this way. And I think, I come from a very different perspective than the previous speaker, but I think I land on a very, very similar conclusion. President Trump is known to be basically a wide range of things before he entered politics. One of the things he is most famous for is a book that is called The Art of the Deal. Prior to The Art of the Deal, there was a very big consensus, and arguably it is still true today, that, Getting to Yes, another bestseller, was basically the Bible of anyone wanting to understand negotiation processes. Negotiation processes, namely, the art of getting to yes, the art of compromising, the art of trying to identify overlaps between two differing parties, and therefore framing the argument based on that overlap. In The Art of the Deal in the mid-80s, Trump comes in and basically tries to blow that whole logic to pieces and says any negotiation process you undertake with anyone needs to be a struggle, needs to be an arm wrestling match, and needs to be that power struggle in which you try to get the other to fold. So what does America first mean? Maybe we need to come to terms with the fact that this notion of trying to find compromises is not guiding the first world superpower anymore. It is more this notion of entering an arm wrestling match, of trying to basically get the best deal. Maybe some of you among the listeners today are game theorists and might remember the phrase zero-sum game. What you win, I lose. What I win, you lose. That's another way to say it. That's another way to say it for the United States view of the world. So America first, less about compromise and think about all of the ramifications this has for the WTO. I think the WTO, for instance, is probably never going to come back the way we've known it prior to 2016 and prior to Donald Trump. This means that I don't believe in protectionism per se, because as a student of history, protectionism is something very crystal clear that we've identified with the 1930s, at least in Europe and in the United States. Here, it's not really protectionism. It's a form of transactionalism that Ms. Alele talked about, and I think was very telling. Transactionalism, meaning an America that is far more demanding on the costs and benefits of what it gets. And America first, I also think ultimately means one last thing. That is one major lesson from this election, which is the following thing. This election was a collision course between two narratives of the United States. One was US democracy is under danger and we need to do anything we can to basically rally against the person of Kamala Harris to save democracy. Number two was, hey, look, I mean, I still have economic issues. I have been hit and I have that searing memory of inflation still. All right. My economic prospects matter more than anything else. All right. It was a collision course between those two narratives. Many people outside the United States thought, especially in Europe, I don't know how it was in Nigeria, but thought the democracy narrative was a powerful one. Most Americans did not believe it was. America first means America far more transactional and far more thinking about its economic prospects.
Right, and thank you for mentioning those books, The Art of the Deal and Getting to Yes. And it reminds me of a popular saying, don't negotiate when you're hungry. So what kind of mindsets do you think African leaders should take to the table when negotiating with a Trump presidency? That's for Professor Gez again.
Yeah, no, that's again a very good question. So I think that this is a president that will want to know what's in store for him. He will want to know basically what is it that he can bring to the back home and sell as something he won. I am struck by the fact, and this is a lesson from China, but I wonder if there's anything replicable for Nigeria and its African partners. In 2019, one of my last trips before the COVID misery was to Beijing. And I went in December 2019 to Beijing thinking to myself, everyone is going to want to talk to me about Donald Trump, and everyone is going to want to talk to me about, this trade war that he just launched. And most Chinese people did not care. They told me, Trump is a president we understand. You pay him, and he does what you want him to do. That's the concrete reality of being or dealing with a transactional president. I think this is a president who's going to want to put the emphasis on bilateral relationships. And I think that African partners would do well to push back on that and to try to create a united front and try to think about how can African nations find a core set of interests to push forward. Because I think in that arm wrestling match that we talked about, you will be far, far more influential. I think that this is America first about business and about economic prospects. I think, putting economic prospects for American partners on the table and pushing them, forward will be a lot more meaningful. It seems to me that, these go hand in hand with security guarantees. Well, security guarantees are less natural on the part of this US administration. So that might be part of the power struggle. If you want this, you must get that. And I also think, more at a micro level, in terms of your dealings day to day, remember, America is a different place. Maybe some of you have known America in the past, and I'm talking about an America from 10 years ago, not that long ago. I think we're old enough to remember America from 10 years ago. Bear in mind that, in my opinion, America is a very, very different place. The way you market, the way you communicate, the way you deal with people is incredibly local, and you are probably not going to speak with an American from Texas the same way you might speak with an American from California. I know we have one from Seattle, if my memory serves me right. So Amanda can give us her perspective
Right.
on that.
Okay.
But there you go.
All right. Thank you for that, Professor Guest. Let me come to Amanda now. Let's look at globalization now. So does prioritizing U.S., domestic issues over global affairs signal, maybe some kind of decline, for globalization? And where do you see nations that, long pursued, interdependence, through trade?
Actually, I have taken the Professor Guest's class, and we talk about that in the past in the class. And one of the milestone event was the WTO. China joined the WTO, became a milestone event in the economic history. I personally believe that the globalization is a mega experiment that we conducted collectively to see how we can really drive specialization and get the most productivity out of countries who are specialized in certain areas. I think that polarized not only United States, but also the world. In United States, after decades of globalization, you can see the polarization of wealth. There are people, rich people or corporations getting much more wealth than the people who are working in the factories and building automobiles. And that, I think, if you look at from a historical perspective, might have lead to the shift of the cultural change and the election results. I think there is, if you look deep into what happened in the United States, there is a really good reason why Trump came to power and then the movement he led. And therefore, if you look at globally, and there are countries who got enormous benefits from globalization. A professor, Guest, he talked about how China has prospered during after WTO, but there's also countries become much poorer than before. And then so I see the globalization actually polarized not only United States, but also the world. And what happens with America First policy, I think there, even before that, there is already a substantial trend in terms of a deglobalization. And you can see that in globally. That is not just going to happen on January 1st when Trump coming into the White House. And I think that it's not necessarily, we should not be afraid of that, because there's always a reason behind what is happening. And I think the good thing about that is, for example, in the United States, we focus a lot more on the security of the supply chain. And then recent global event proven that is a strategic thinking in terms of making sure your supply chain is secure in the event of global unexpected or expected crisis. And I think that is a really good way to stabilize the economy as well. And then for other countries outside of the United States, I also think this is an opportunity rather than be afraid of, oh, it's going to be a lot of barriers in trade, and we will not be able to trade with the United States. The opportunities are that taking this for using Europe as example, that how we could potentially secure our own defense or beef up our own defense system and get our feet on the ground. And in Africa, I think is also a great opportunity in terms of how we can really focus on driving I think the first speaker, Margaret, talked about making the domestic environment more prone, for example, private business, protection of business interests, making the business environment more attractive to attract foreign investment, rather than hoping that America would somewhat think that that they need to strategically invest in Africa, certain countries for democracy purpose, for example. I think really give people opportunity to reflect on how we can stand on our own feet, each country, and then secure our own business or national interest, not to rely on the United States and their strategic thinking or interest. So that's how I see what America First is going to have an impact on globalization. But this deglobalization trend has happened before.
And definitely, you know, when we see all of this happening, we have a couple of trade blocs at this time, you know, from the BRICS, or ASEAN, and the EU. So if would you think we'll see countries, you know, start pivoting, you know, to these blocs, you know, where the America First policies, you know, start to, you know, harm individual nations? Is that what we're going to see, like reliance on blocs, trade blocs?
My personal observation of the trading blocs, it is a smaller scale of the globalization experiment, or it is intended to balance the power of in terms of trading or foreign policies. But it's also kind of a benefit more of the powerful party in the bloc, and then at the expense of the weaker party or other participants of the bloc. And then there's always a loose kind of alliance in the bloc. And it's very easy for, if you have opponent, to pick the weak link to attack the bloc. So therefore, I think that there's, of course, when people fear that America will, I would emphasize America First does not mean America is going to de-engage, not engaging with countries globally. I think it's to a different extent, a different way of engaging with other countries. More bilateral, meaning country to country, than engaging with a bloc or in that way. I think that what countries would also, I'm a very optimistic person, thinking every challenge is an opportunity, like most Americans, that I think it's really important that, especially for countries like Nigeria, not to rely on the thinking, okay, I need another bloc or tribe or a group of people to leverage to be able to engage with the United States. I personally do not think that is the most effective way to engage with the new United States. I think that countries like Nigeria need to be proactive, not to be paralyzed by fear, thinking, okay, we're not in the bloc. Okay, United States is going to deglobalize or de-invest in countries like ours, but rather to think about going back to the point of negotiation, right? Take a proactive approach, think about what you can bring to the table. What is, because the negotiation with Trump or the Trump administration is more about negotiate from a position of strength. I think that is probably more important. I think Trump understands that very well. He would always position himself, even before coming to the table, in the position of strength. And I think countries or African countries like Nigeria would think about what would you bring to the table and proactively understand, and then also gain insight into what is going on in the United States, what's going on in the cultural shift, what is going on in the mind of the leaders and the business people, and then be able to think about how I can come to the table with the value I will bring to, and actively engage in the conversation and dialogue. That will reduce the fear, that will reduce the mistrust and build trust, and that will drive the engagement to the benefits of United States and Nigeria. So I think that not to think about join the bloc will help us or help Nigeria, but think about, as a country, standing on your own feet, what value I can bring to the table, and also be able to proactively engage with the United States, not to wait until something falls from the sky or another bloc invited me to join, and then I'll be part of the bloc to engage with the United States. I think Trump is very good, and then his administration is very good at we're picking up the weak spot if you are in the bloc to actually dismantle it. So I don't think that strategy would work.
Okay, thank you so much for that, Amanda. But before before we wind down, this session quickly, Professor Gers, I know most African countries, dealing with heavy corruption at this time. So talk to me about how much of a risk, corruption poses to actually negotiating with a Trump presidency. Very quickly.
I mean, in a word, anything that can strengthen your position in this dealing relationship and this unprecedented negotiation relationship can help. The presence of corruption is something that can be incredibly weakening as a reality, as a country risk element of any banking financial institution that would try to back up a deal in the United States, and any effort to reduce it would go an incredibly long way to strengthening your position in the negotiation relationship with the United States.
Fantastic. Thank you both. That was a great session there, and I have learned so much. Thank you so much, Amanda
Thank you for having us.
And Professor Jeremy Gers. Let me hand things over now to Faith.
All right, thank you very much, Ladi, for that. And it was a fantastic session, of course, with Professor Jeremy Gers and Amanda Wolverton. Learned so much, from that as well. We are now going into this conversation talking about Nigeria's 2024 economy In the review, right, so much has happened for Nigeria this year. If you look at the different macroeconomic indicators, Nigeria's economy did seem like it was stuttering towards the finish line. If you look at inflation at over 33%, looking at our NPR rate, that is now at 27%. And you're looking at the other macroeconomic issues, FX rate of $1, 1,755 naira to a dollar. That's what the naira is right now, compared to 1,000 naira that it was last year. And then you're looking at money supply as well, over 108 trillion. Okay, and that is about 68% year-on-year growth in money supply. That is a big problem, even though we have had all of this tweaking of the MPR just to try to combat that and inflation, they still seem to be running loose. And then we now have the cost of healthy diet that spiked by 113%, okay, to 1,346 naira in September. And if you look at what it was last year, which was just 631 naira, you see that it is a huge difference. Okay, so we are going to be talking about all of this that has happened in 2024, and I am glad to be speaking to an impressive panel composition today, Dr. Olusegun Omeshaki, Dr. Bumi Bajimo, Mr. H. Apata, Mr. Kelvin Emmanuel for this session. So I'm going to come to Dr. Olusegun first. Okay, let's talk about the policies that happened in 2024 from a policy perspective. How did Nigeria's economy get here?
Good morning, everyone. Once again, it's a pleasure to be here. That's a big question, really. How we finally, find ourselves in this situation. But let me just quickly take us back to how we started historically and very briefly. So I'll start from around 1999 when we started the democratic governance. You remember we had a very fantastic series of growth rates from 1999 to 2002. We ended up with about 14.6%, and that looks so fantastic. Because if you talk about that now, it will look like that's not possible. But we did it, But from 2023, around 2022, 2023, we started coming down. So from that acceleration economic era, we ended up decelerating the growth pace, and then from 2023 to 2025, we ended up with 7% in 2025. I mean, in 2005, brother. And also from 2005 to 2010, we tried to build our resilience to, go back to where we were before. We ended up in 2010 with GDP growth rate of 11.3%. And so if you look at the trajectory from 2010 till 2024, we've been struggling with 4.9, 6.3, 2.7, and finally in 2016 we had a recession minus 1.6. We struggled to be out, we went back again in 2020, and then here we are today. We might likely close the year with 3.3 or 3.2, depending on some of the assumptions that we want to consider. So historically, the Nigerian economy has been very, very, has never been in good shape. I mean shape. I'm not just talking about growth rates. There are, for me, two key factors that are responsible for this. The first one is the structure of our economy itself. The current structure, of course, which we've been, carrying over for years, cannot, significantly deliver a strong growth and reasonable development. And that's why even when we have reasonable growth, we see the massive poverty, unemployment, and so many other inclusive issues along the line. So I think the first factor, what brought us here, has always been with us, and it depends on how we define here. Here has been as far back as 2011, 2012, 2014. And so the two factors, number one, our structure, the way the economy itself is structured is fundamentally faulty. And it doesn't matter how long we follow that, we're still going to be battling with growth rate that is far below 5%. And secondly, is the quality of our economic coordination. When I say coordination, I'm not talking about the common narratives around fiscal and the monetary coordination. I'm talking of economic planning. I'm talking of a clear economic philosophy. We've had other speakers talk about what is happening globally. We are still battling with having a very clear economic philosophy that will stand beyond just different political transitions. So a party comes in, spend 4-8 years, another comes in and reverse or do something lower or improve. So these two factors are, for me, why we are here. And if we don't look at them critically, we may continue to be in this trajectory for a very long time. I would like to stop here, at least briefly.
All right, thank you very much, Dr. Olusegun Omishakin. You were talking about, the structural issues that have led us here. But let's just look at 2024 in general. One of the things that this administration did was undertake a lot of reforms, things that some other administrations had shied away from doing, whether you're looking at, the liberalization of the forex market, you're looking at the removal of the fuel subsidy and other things. And now, of course, we have the tax reforms that is in field right now, the National Assembly. So there are so many reforms that has been undertaken by this particular administration. But still, of course, like you said, we are still struggling with a 3.46 GDP growth rate. So let's talk about, how these policies are being implemented. Is that something that you can look at that, is it about the implementation of the policies themselves? Or are they wrong policies, to start with? What exactly do you think has been the issue, especially with these new reforms and these new policies that this administration is taking on so far for 2024?
Yeah, thank you very much. I also refer to the initial points I made. It doesn't matter how efficient the policy might be, the best that the policy or reforms can deliver will be determined by the efficiency of your economic system. And I think that's what we are experiencing. Critically, if you look at it, at least let's look at it on a macro level. If we pick it one by one, we'll say FX crisis, subsidy removal, we may be lost into one-on-one, data here and there, and we'll start saying, oh, government shouldn't have done this. I tell you, it doesn't matter how or when, it's going to be very tough. Now, this is an economy that we don't really understand the magnitude of the excluded population. We don't have the understanding of the informal operations, market, economy, and so many other things. So it doesn't matter the efficiency of the reforms. It doesn't matter when or how you do it, people will still suffer, right? And again, when you have the most of the economic contributors or activities to be such that is below a reasonable regional productivity level, it still doesn't matter how you go about your policy reform. We're still going to have huge cost from that perspective. But let's come back again and then look, okay, what do we see or how do we think this might end up? Maybe in the year or in the early part of next year. Let's just look at the first part of economic stability, because again, we need to talk about that part of stability before we start talking about the longer term issues. I think the policy philosophies or ideas that we've been experiencing or experimenting with so far, we continue. I think what might change are the strategies. And we've been seeing a little bit of them now. What might change is let me give an instance. You have the CBN, who is strongly focusing on targeting inflation, who started by believing that you can only use at least mainly the tools of interest rate to arrest inflation. If you look at the rate at which they've been using this compared to what we had recently, you will notice that the CBN also is beginning to think that, well, this might not really give us the optimal yield. So I think the strategies might be changing over time, but we're not going to have, at least in the first quarter of the year we're not going to have something relatively better off in terms of the economic costs. So we might achieve relative stability, but the cost is still going to be very high.
Thank you very much, Dr. Lucia Gombashakin, for that. We're going to come to you later, during the conversation again. But now to bring in Dr. Bumi Bajamo. I hope I got the pronunciation of your name right. So now we are going to be looking at other key sectors, and that's talking about trade, exports, capital importation, foreign exchange inflows, and all of that. We've seen all of this past continue to still struggle to yield any sort of huge results, for Nigerians especially. So let's talk about, from your perspective as a global leader in this space, why are we yet to see notable improvements, right, in key sectors of the Nigerian economy, specific to areas such as trade and, of course, also foreign exchange inflows and exports? So why are we still struggling in this particular axis?
Thank you very much, and thanks to Nairametrics for having me. I would say from an economic and monetary standpoint, there had been measurable improvement. They might not be visible to all, but we've recorded some measures of improvement. And, if I wanted to point at those, I would say that the major thing that is impeding the visibility of this reform is that in times past, a lot of things have happened. You had the kind of monetary policy administration that we had, and you had investors' confidence that had over time been eroded. They are gradually coming back, but it will take a bit because a lot of investors and the players in this market would like to see the direction of travel in terms of reform. Are they transient? Would they be consistent? Would this be sustainable? Or would there be drastic changes midway through? So those are some of the things. Recall also that last year we had the massive devaluation in the level of the exchange rate. Last year, the exchange rate closed at about 907.11. Earlier part of this year, we had moved to 1,413 level. And then compare that to where we are right now, 1,690, you said 1,725 range. What that means is that no investor would ordinarily, as a rational being or rational institution, want to start booking mark-to-market losses from day one of trade. So they would rather be cautious. But does that mean they do not believe in the economy? No. And that's what you've seen in terms of momentums, in terms of the measurable flow that we recorded. But on the FX side, we're part of the global player. The level of interest rate in the United States had been quite high. You've seen rates trending between 4.75 to 5% until the adjustment by 50 bps in September, which took it to 4.25 to 5%. High level of interest rate in the United States meant there was an outflow of capital, what you call capital flight, from emerging markets, from countries like Nigeria into that market. And as long as that level of interest rate remains high, there will be a choice for investors between our own imperfect market with a lot of issues, structural issues, unpredictability versus the steady market. But our market is still a bankable proposition. But the recent US election also have added to the strength in terms of direction of travel, in terms of the confidence in terms of developed world. So for the US, yes, the level of interest rate, the Fed is trying to bring the interest rate down, as you've seen by the court. But assuming all of the projections of the Trump administration were to come true, then you will see elevated level of interest rate because of the strengthening of the dollar, and that might have significant impact on the economies, emerging economy, as well as Nigeria. Also, the current global agitation and geopolitical tension, the Russia-Ukraine crisis, the Israel-Hamas engagement, Israel-Hezbollah conflict, and the Houthis agitation, which is disrupting flow of trade, and even the ease of mobility of consignment has significant impact in terms of reform. But in terms of where, yes, it's positive. It's being seen gradually, but caution is the word, because you need to see the direction of travel. Thank you.
Thank you so much for that, Dr. Bajima. One of the things that you said is that there are gains, but they are not visible to all yet. Another thing that you mentioned was about the Nigerian markets, and there have been other experts that talked about how the Nigerian market has been very, very resilient throughout all of this period, and we're seeing a huge flow of FPIs that has helped build up our, foreign external reserves. But there is still a disconnect between what is happening at the markets, what is happening with FBIs, and of course the Nigerian people. So how do we bridge that gap? When can Nigerians start to see these gains, that you are talking about, at this point? Are there any benefits so far, from this FX reforms program, where the CBN is attempting to converge rates, and which sectors are benefiting as well?
Okay, so let me quickly touch that, and I will talk about the benefit. So in terms of the exchange rate movement, if you recall what happened last year, the gap between the official and parallel markets was like night and day. So you had the official market at about 475, and you have the parallel market trending in 1,000. With the reform, earlier part of this year, as of April, the gap had narrowed to less than 1%. Even though now you've seen the gap widen to like 5% gap. That is one positive. But in terms of the benefits, yes, there are significant benefits. Number one, take the FX market landscape, and I will tell you what has happened in the market and who has benefited. In terms of FX liquidity, the level of liquidity has improved significantly. As of last year, before this administration took over, the FX supply had practically dried out, and even the manufacturers could not buy. Today, the issue is not availability. The issue would be at what price, and does the manufacturer, traders, exporter structure allow them to be able to buy at that price, and can they effectively trade at that price, which is then where the issue of purchasing power, who are the off-takers, and capacity constraint in terms of input cost structure. So on availability side, yes, significant improvement. It's available for those who can afford it. The question is, how many people can afford it? And how many companies can buy at this level and sell effectively? Who are they selling to? The consumer. The income level has basically remains stable. Yes, I know there have been wage increases, but how many companies, how many governments have implemented, and how many workers have benefited? So in terms of that, then you will see that, okay, there are still limiting constraints, which is capacity and ability to absorb what is available. But in terms of the beneficiary, I would say basically, somewhat with that availability, most have benefited, but principally, I would say the exporters. Because exporters leave petroleum out now, agro-allied exporters, people who export agricultural commodities. If you look at the Nigerian trade position, you will see that outside of petroleum, which forms a basic, a significant portion of our export, you will see things like cashew, cocoa beans, and rubber also making appreciable impact. Provided the players in this sector can produce, the devaluation of the Naira has enhanced the competitiveness of a typical Nigerian exporters. So if they can export, there are people to buy because it costs next to nothing in dollar terms for people to buy it. The issue is at what cost will you source the import to now produce the export? And can you afford those? And does your manufacturing proposition allow for that. That is one. The second sector that have benefited will be the financial industry, where I play. Take one policy. In February, the CBN moved from daily arbitrary debit in terms of CRR to an updated CRR regime. The updated CRR regime is based on incremental CRR adjustment, which allows a bank to effectively monitor, plan, and align their position with the central bank and free up liquidity. So the ability to effectively calculate what your CRR is a major relief for the financial sector. Another sector that have benefited will be the manufacturing sector. Before now, you have the issue of trapped cash in terms of manufacturing entities depositing Naira over extended period, some spanning years, for FX they weren't coming. Significantly, those trapped cash have been eased, FX have been purchased, and people can now free up those idle cash and use it for their advantage. Yes, I'm not unmindful of the fact that there is still a bit of about 2 billion unreconciled FX position, which, based on my understanding and what I know in the marketplace, the CBN have been engaging operators, airline, manufacturers, traders to reconcile their position. The only issue is that you still have some bit of Naira trapped under that arrangement. But in fairness to the CBN, I know they are engaging. It might not be a competitive level of interest rate that are being offered to these people, but as against zero interest regime, they are getting something. Finally, on the positive in terms of FX, recall that at the end of Q1, earlier part of Q2, we actually saw the Naira appreciating from 1,430 something to nearly 1,000 on the back of reform. And people were actually projecting 900 to the dollar as of April this year. So there are positive, there are benefits, but are we where we need to be? No. I think we still need more forward guidance from the CBN so that there is clarity around the policies, around the reform, and people can price effective. Because if you ask me today, what is our exchange rate regime that we're following? I would want to say it's free float, but it's also guided. So there needs to be clarity around this, and people then can plan and abide by the dictated regime. Thank you.
Thank you very much, Dr. Bajimo, for that. One of the things that the CBN governor, has said recently was that he was going to prioritize, stability mostly over the price of the exchange rate itself. Let me come to Mr. Asia Patai. I know that you've been wanting to say something, but just before you give us your views on the other issues, let's talk about, the capital markets and capital inflows especially. So from capital market perspective, we saw that the all-share index has been an interesting bright spot in 2024, right? Specifically the all-share index rising from 52.239 in January. We saw that 2023 to 98.559 as of September 2024. So let's talk about the key areas that outperformed expectations. Can you tell us a bit more about that?
Well, I think in terms of the stock market, this is just a tiny part of the capital markets. I mean, the debt markets in Nigeria are way bigger than the stock market. But from the stock market point of view, year-to-date return is just 30%. That 30% is was initially concentrated because the year-to-date return was 30% by April. And so how come it's been flat since April? Well, the initial run-up in that index, the all-share index, was highly concentrated in a couple of very large stocks, the likes of Dangote Cement, Boa Foods, Gego, and a few others that had very exceptional performance in Q1. But ever since then, the return position has kind of broadened out, as some of the big names have pulled back a bit. Dangote Cement is probably down almost 40% from its high. But that's been made up by a more broad performance in a number of other sectors. In terms of, it depends on what your expectation was coming into the year. I mean, different people would have had different projections. I think what a lot of people probably would not have projected was such a significant decline in the exchange rate from 907 to where it is now. What is relevant about that is that for a lot of the companies that had huge foreign currency liabilities, when the current naira moves that much, you have what you call foreign exchange losses. And so all of a sudden, we have a situation where very large companies like MTN, Nestle, Dan Sugar have negative shareholders' funds. I mean, that is not a normal situation for a very large company like that to basically theoretically have no capital. And so those kind of companies have not done well. Their stocks have declined substantially. But that has been made up by performance in the banks, more or less. I mean, the recapitalization for some of the banks is well, it's partly done. And some of those bank stocks are up relative to the start of the year. So that sector has definitely done well, the banking sector. One of that sector that has kind of benefited a bit is the downstream petroleum. In fact, the petroleum sector up and downstream. The deregulation of petrol prices effectively meant substantially higher revenues for those companies. And even if their margins were constant, you have a situation where your absolute naira profits are significantly more, where you have a petrol price that is probably 4 times what it was at the beginning of last year. Also, the upstream companies, because their revenues in dollars, if you check their actual output, it's not really gone up. We're talking CEPLAT primarily. But then because of the exchange rates, it just looks as if they're doing very well. And so their prices have gone up. But overall, I would say that the performance year to date is decent considering the economic situation that the country is in.
Yeah, that's what you would say, and I guess a lot of people also agree with you that the markets, has held on, has been resilient through this all. But let's talk about that and look at the Nigerian people. Is the Nigerian market, is it disconnected from the average Nigerian? And when you look at these companies that you've mentioned that have done well, were they able to actually pass through their prices and grow their margins with how they did, at the markets as well?
Well, again, when you say disconnected from Nigerian people, I mean, the Nigerian economy is largely informal. I mean, when you bear in mind agriculture is the biggest sector, and that sector is almost non-existent in the stock market. Also, the Nigerian stock market is not a reflection of the Nigerian economy at all. There are very large companies in other sectors, in some sectors that are just not represented. But in terms of the ability to pass on costs, I mean, I mentioned the downstream petroleum companies. They don't have a choice. There's nobody selling petrol cheap. There's no cheap petrol anyway. And so they pass those costs on to you 100%. Yes, you can say that margins have declined in some sectors. Again, some sectors are more hard hit than others. Those that rely heavily on foreign inputs are clearly not really able to always immediately pass on those costs. But again, when you have all your competitors have the same problem, then it's a bit easier to pass on costs. But if you have competitors who don't rely on imports as much as you do, then those kind of companies couldn't pass on their costs. I think it's interesting to look at the banks because again, the banks have somewhat benefited from big changes this year. One is the FX rates. There was a period where banks had very large FX gains until the government decided that they wanted 70% of those gains. And those gains seem to be disappearing from the accounts of the banks because nobody wants to hand over 70% of their money to the government. But at the same time, when you look at the interest rate environment, I mean, in February last year, 1-year discount on a treasury bill was 2.25%. Last auction, last week, it was 23.5%. Now, when you have that kind of movement, basically a tenfold movement in rates, somebody is benefiting somewhere, and that's typically the banks, because higher interest rates mean higher revenues for them and more often than not higher margins. Particularly when we are now in an environment that if you're a bank, you can get about 30% risk-free from the central bank or Nigerian government. So You know, what are you paying on deposits? The average big bank's cost of funds is less than 10%. So they have very big margins now, and they are benefiting. They are very happy to pass the cost on to customers, and their shareholders are the net beneficiaries from that. But again, given the level of inflation in the economy, it's no surprise that the revenues of most companies are growing, and I'll say quite a number of them are actually growing slower than the economy is suggesting, that their volumes are down, which is pretty what you'll find in a number of sectors, that the actual unit sales are not growing because purchasing power is down, costs are up, affordability is not really there. And so those companies that don't have pricing power are feeling the pinch. But again, overall, in terms of the stock markets, as I said, you know, up and downstream petroleum banks have kind of benefited. A few specific situations with consumer companies where you have corporate actions or strategic movements in those companies, you've seen some benefit there.
All right, then thank you very much, you know, for your inputs. Where the markets are concerned, we'll still, of course, come back to you as this conversation goes on. But right now, to bring in Mr. Kelvin Emmanuel as we delve into the conversation on oil and gas. And I mean, Mr. Kelvin Emmanuel is very invested in this space. He's always talking about what's going on in oil and gas. And looking at what happened, you know, this year, we've had different ups and downs, but even look at the coming on stream of the Dangote refinery, which means that Nigeria can finally start having local production of its crude oil refined into petrol and, of course, other of the crude oil derivatives. Let's talk about the benefits, you know, that this accomplishment means for Nigeria in general, and of course, the different sectors that might be impacted, you know, with this as well. And of course, you're free to also talk about the other issues, especially the downstream sector that has been going on so far. Mr. Kelvin Emmanuel, go ahead.
Great, thank you so much for the privilege. Thank you to Godia, the CEO and founder of nairametrics, and the entire team of nairametrics that do such a wonderful job. It's a privilege to be here today. I would tell you, you know, usually when you talk about refining midstream, the temptation is to only focus on white fuels, petrol, automotive gasoline, oil, and Jet A1, even if it's a major source of contention. And I'll come to the nitty-gritty of the issues and the issues in the entire supply chain from upstream, midstream to downstream. But you know, Dangote refinery is also going to provide a lot of raw materials for the non-transportation fuels. You know, bitumen binders, propane. Refinery started selling propane gas. You know, the higher distillates, petroleum coke that is used for, you know, several layers of manufacturing, petrochemical feedstock that is used to produce polypropylene and polyethylene crystals. Your plastics are made from that, and several other input that goes into pharmaceutical and other layers of manufacturing, you know. However, what I've seen is that the international community appreciates Dangote refinery more than Nigeria appreciates it. And the reason I say this is because you can see over the last 5 months, the fisticuffs that has gone on between the Nigerian government and the Dangote refinery. In September, Naira-based crude oil sales agreement was done. In October, NNPC did like a performative supply of 4 cargoes and stopped supply. You know, and even at that, it was 60% Naira, 40% USD. That deal is practically dead because NNPC is not been complying with the promise of supplying about 12 million barrels of crude oil per month. And Dangote refinery is currently, you know, trying to source feedstock internationally. It's ordered for another 2 million barrels for the first time in the last 34 months, you know. So the question is, Nigeria is a member of OPEC. Nigeria produces 34 blends of crude oil, mostly sweet crude that has very low sulfur level, about 0.0 0.15% compared to the middle and heavier distillates that has sulfur level of about 0.5, 0.6%. It's easier to refine. You get more transportation fuels, especially PMS from the food cracking spread when you're refining, than you get other products. And this is the reason why it's preferred, and it's the reason why it was supposed to be a comparative advantage for a Dangote refinery, being that you're in your country, you produce crude oil. But what have we seen? We've seen a situation where NNPC came and misled the public and said that it's doing 1.8 million barrels of crude oil, but in actual fact, it's doing 1.53 million plus condensates. You've seen a situation where, it was not able to meet up with the obligations of the share purchase agreement it did the modified carrier agreement. After Exim borrowed $1 billion, was supposed to pay another $1.7 billion in feedstock at 300,000 barrels per day for a period of time until it pays its equity contribution for 20% of the Dangote refinery. It couldn't. And so when people say, oh, Dangote didn't, include in his business plan, his business case, like supply of feedstock, reliable supply, firm agreement for supply, I laugh, because if your state oil company is not able to meet up with the terms of a share purchase agreement, then are you living in a country? So you have a situation basically where NNPC has structured modified carrier agreements with international traders in crude oil swap. It's basically does it directly with the traders, or does it through multilateral development bank or an international financier. If you're doing directly with traders, you swap crude oil in exchange for PMS. The technicalities and details of that deal is not known. And that's the reason why you've seen that over time, they bring in anywhere between 1.5 and 2 billion liters of petrol per month for the markets to consume. I have had a question with the amount of PMS the government says that Nigerians consume a day. I don't believe it consumes more than 35 million liters. Yesterday, Cardozo at the CIBN dinner speech talked about how much petroleum subsidy costs the economy, about 6 trillion. FX subsidy did about 4 trillion. And you see that in 2022, what went into subsidy to the ratio of the entire budget was anywhere around 29 to 32%, which was insane. And the effect, they thought they did something smart by removing the expense item for subsidizing petrol before they removed and went to the regulation according to sections 205 and say that, oh, you know what, we're no longer paying subsidy. If you look at budget, you won't see any expense line item to show we're paying subsidy. They basically transferred the burden to NNPC. And what NNPC did was it was deferring the costs, and there was no audit for it. So for personally, I have a huge issue with them because they are unable to reconcile, for example, the amount of crude oil they lifted in 2023, which they say was 196 million barrels, which I don't think is correct, because based on the fact that Nigeria did about 537 million barrels of crude oil last year in fiscalized production, NNPC was supposed to lift 275 million barrels and not 196, because if you look at the deep offshore, swamp, and onshore, the cumulative average of ownership, NNPC is entitled to 51.3%. And if you calculate it at 537, they were supposed to lift 275 million barrels. So if you lift 196, but you're not able to, pay and do the swap that you've done with traders and multilateral development banks, and then to get PMS, and you're owing $6.5 billion to traders, which is exactly equivalent to what is missing in terms of what they were supposed to lift and what they say they lift, 79 million barrels at an official selling price of $83. There are a lot of questions that the government has to answer. And you look at all the subsidies: FX subsidy, petrol subsidy, power subsidy. In fact, I was looking at the reports that was produced, excerpts of it by the Office of the Auditor General of Nigeria. And in his report, he said that Nigerian Bulk Electricity Trading Company, which is like a stopgap and a vehicle the government created to, cap the price of electricity tariffs, and absorb the shock for discos because, the metering ratio, prepaid customers about anywhere around 40-30%. They awarded contracts worth 100 billion that cannot be accounted for. So there are issues in that area. So you look at all the subsidies. Subsidies, I'll say, takes anywhere around 13 trillion naira a year. How much is the revenue? What's the tax to GDP ratio? What's the non-tax to GDP ratio? The government cannot fund its budget because it doesn't have enough revenue. It goes to borrow. If you look at the Eurobond spreads, it's
before we get,
I'm coming. I'm running. It's floating anywhere between 8.8 and 10.6%. Wale Edun wants to borrow to cover shortfall in the budget. In 2025, he's most likely going to borrow more money. But now, with Trump coming, and this man signaling that he's going to cut the FOMC rates, that secured overnight financing rates in the US that is anywhere between 2.9 and about 3.6% is mostly going to be adjusted down. Like Madam Bumi, we're going to see a flight of capital back to emerging markets. But the question is it sustainable for the government to continue to borrow? And at what extent are they going to borrow to cover for shortfall in the budget because they're not able to accumulate a lot of revenue?
Let's come back to oil and gas because that's where I want us to, sort of like focus. You're talking about revenue. One of the major places for revenue for the country is definitely, oil. Right. And we have seen the projections, for 2025 budget. We saw that the budget is aiming at 2 million barrels per day production. Okay, but we have seen time and time again that we are unable to meet up our OPEC quota. And then recently it feels like, okay, production is starting to go up. So if you look at the projection for next year, the 2 million barrels per day, how feasible is it? Do you think that Nigeria can do that, especially when you put into consideration all the swaps and the deals and all of that the NNPC has done already?
Faith, it's a daydream. It's a daydream because I'll tell you what the issues are for the operators, what they are complaining about and why they are not bringing in significant capital to, do E&P for wells, especially offshore and deep offshore, which is where the meat is. In oil and gas, when companies want to go into final investment decision, there's usually what they call the recovery factor or the recovery ratio. That's a major determinant of whether it's bankable or it's not bankable. And your recovery factor, recovery ratio is basically the enterprise value of the assets of the company divided by their 2P or 3P reserves, mostly your 2P reserves, your proven reserves, and your probable reserves, okay? Nigeria's proven reserves is anywhere around 37 billion, 38 billion barrels, I think. But different operators, especially the ones that are either in non-materiality or materiality threshold, they're basically talking about the companies that are small, that are mostly onshore, operate marginal fields and onshore wells to the big players, the six sisters, Chevron, Mobil, Eni, Total, Shell, and the likes of them. What is the recovery ratio? Number one. Number two, even at that, when oil comes to wellhead, the recovery ratio in Nigeria goes beyond just bringing oil from under surface to subsurface. It goes to how much of that oil from the wellhead goes from flow station to terminal. In Nigeria, there's that country risk premium in the oil and gas sector. And I'll tell you what, there's stealing of crude oil. NATI says that crude oil theft has dropped to 1.4%. I think what NATI is reporting is crude oil theft between flow station and terminals, not between wellheads and flow stations. There's stealing of Nigeria's crude oil that's not accounted for between the wellheads and the flow station. So if, for example, an operator is doing 200,000 barrels of crude oil per day to wellhead from under surface to subsurface, and is not able to recover 120,000, 150,000 barrels from wellhead to terminal, it constitutes the risk in its recovery ratio. This is one major issue that has made crude oil operators to raise their unit cost per barrel to anywhere between $35 to $48 per barrel, which is very high, which means that if crude oil price drops below $60 per barrel, Nigeria is in serious trouble, okay? There's also the issue of the structure or nature of the commercial agreement between the state oil company, NNPC, which holds in trusts all the government's equity in the oil and gas sector, onshore and offshore, and the operators. So typically you have sole risk, you have marginal fields. Those ones constitute very, very low outputs and no materiality threshold. You have production sharing contracts, then you have joint venture or registered joint venture agreements. You know, this idea, especially under UJVs, yeah, where companies come and say they want to develop a brownfield, a greenfield, and it's going to cost them $2 billion. Let's say NNPC owns 60% deep offshore, you know, and they say, okay, you own 60% deep offshore, you're supposed to do capex of $1.2 billion. Where's your money? NNPC say, we don't have it. We do carry, they invest all the money, and then when they start recovering oil, that oil that they recover is not taxed by the government. Okay, when oil is given to NNPC based on the sharing formula, NNPC is supposed to sell and start amortizing their capex costs, their capital costs for developing and production, and then the operational costs. Then, because of the recovery factor risk, they raise their cost of OPEX, and it affects how much Nigeria gets. NNPC sells the oil, holds onto their joint venture cash calls, and then it incentivizes them from wanting to put up more money. And now they're saying, look, you know what, we don't want to do this UJVs, you hold our money without interest, you know, structured according to LIBOR. We want you to bring up your own capital to the table. How is NNPC going to bring up their own capital when it borrowed $1 billion to finance the 7.2% it holds in Dangote Refinery and couldn't put up the remaining part of its equity contribution? How is it going to do that? You know? So the real meat of the matter here, number one, the nature of the commercial agreements. Number two, the recovery ratio and the risks that are associated to it, getting from undersurface to subsurface to flow station to terminals.
So basically, you do not see it as something that is possible to get the 2 million barrels. Because of time, I just need you to quickly.
The Honorable Minister's projection is a daydream. It's not being factual. It's not showing Nigerians a plan, a practical plan that this is how we intend to achieve it, and these are the pain points that has constituted delay for achieving it, on how these issues are going to be tackled. It's not showing it. It's just talking. I'm sorry.
All right. Thank you very much, Mr. Kevin Manuel, for your contribution there. So sorry that we spent so much time on that. Let me bring in Ladi Williams now to take over for the next session.
Thank you so much, Faith. That was definitely a very, very interesting session. There's so much to unpack, but let's take it on further now. And for this next one, we'll try to keep our responses, you know, as brief as possible. So, you know, the 2024 U.S. election has seen President return with, that's President-elect Trump, with an America First agenda, prioritizing domestic issues over global engagement. And that's a shift away from globalization. So the question is Trump 2.0 bearish or bullish? I will definitely find out in this session now, but I'm going to start with Dr. Omishaki at this time. Thank you all for staying on. I still have Dr. Bumi Bajamo, Mr. Gia Pata, and Kelvin Emmanuel. Well, let me start with Dr. Omishaki now. Are there government plans, you know, in flight to tap into how diaspora remittances can be better channeled, you know, to boost Nigeria's economy? We keep seeing other African countries like Egypt and Kenya see that diaspora remittances rising year on year. What are you seeing for Nigeria?
Yeah, thank you, Ladi. I think Nigeria also is at least setting up some frameworks at making sure that we optimize these resources that are coming from the house side. But again, we call that Nigerian Diaspora Fund. And but if you look at the objectives and the what that fund aims to achieve, you can say that we have not moved here. Nothing is really happening there. And I think we shouldn't, of course, be carried away with the size of the diaspora remittances that we are getting in the country, which is about 20 billion as of 2023, $20 billion. But again, we need to ask ourselves these very fundamental questions. The first one is the role of the informal markets. In fact, globally, data suggests that we have 50% more than the current global remittances. That is not being covered, basically under the shadow economy. And I think Nigeria being the largest, having the largest size in the sub-Saharan African countries would also have that impact. So informal markets, that's the first one. The second one, the second thing that I think we are also experiencing now relates to the part of the fact that most of these remittances are community-based, or let me say they are community-bound. They are not mostly available for massive infrastructural investment. These are monies that are being sent for people at the community level, for welfare, for food, for education. So it becomes challenging at the part of the entry. Yes, you have the dollar side, but in terms of the usage of that money, it becomes a big challenge for any government to then start using that money for that purpose. And I think lastly, that and I've mentioned that also in passing, that most of the remittances we're experiencing in Africa, not just Nigeria, they are also consumption-based, right? They are not what you use mostly for investment on the larger scale, even though the size is there. But they are basically consumption because of the informal, market where this money is coming to take care of. So the larger size of the unemployment, poverty, and so many other socioeconomic challenges that we are having, the more we are relying, the economy is relying on that type of fund. So in conclusion, I think the government needs to be more strategic, though that may not be that easy to just capture this money at once. The government needs to be more strategic at how do we coordinate this? How do we set up different different policies or innovative ways of making sure that people are also looking at that developmental part or real investment part of this fund. But again, it's still an interesting part. We heard of recent that the coordinating minister of the economy said that this fund has increased significantly. Of course, again, because of the improvement in the service sector and so many other factors have been driving it. So let's see how this will be able to drive the narrative going forward.
All right, we'll definitely be watching out for that too. But Dr. Mishaki, we've also seen in recent years, emigration of Nigerians, to Western countries. We still have that Jackpot syndrome here. So how do we turn lemons into lemonade, with this, with that converting it to increase, diaspora remittances, even though we're seeing, large emigration moves from Nigeria?
Yeah, it all depends again, on the global, I think the global economy is just starting to pick up. And so, especially when you look at what we had in 2020, 2021, 2022, compared to what we're having now, before the pandemic and after the pandemic. So I believe strongly that the global economy, depending on the outlook, if we believe that the global economy, especially in these areas where most of the Nigerians are going, and again, people are not just going into these developed countries. We have a sizable number of remittances coming from Cameroon, from Benin Republic, from Togo, very, very significant ones. So if we have an optimistic overview of the growth of GDP growth over there, that will also impact on how we can optimize that. But if the African growth projection remains on the average 2.5, 2.6, and the maximum 3%, I don't think we'll have a reasonable, optimistic view about what we can do about that.
All right, definitely. We hope the macros somehow find a way to smile on us at this time. But let me take the conversation further. Thank you so much for that, Dr. Mishaki. And let me bring in Dr. Bumi Bajomo now. So it's Trump 2.0. expectations are high at this point. Looking at Nigeria's trade and exports, how does an America First approach impact Nigeria's trade and export? Because I'm at a place at this time where I want to see more exports, coming out of Nigeria. I don't want to see imports. When I look at, the currency exchange with the naira and the dollar. You can have the floor now.
Thank you very much, Ladi. So I will say from where my standpoint, I'm not sure from a trade perspective, the impact is that profound. And I say that for this reason. Number one, if you look at the top 5 export trading partners for Nigeria, the first will be India, with about 19.6%, 12.6% of our trade. Then you have Spain, you have the Netherlands, and then you have the US coming forth with about 6.8% of our total export trade wallet. The size of our trade with the US comes to about $10.6 billion, evenly spread between export and import. So in terms of export, the US exports about 5.2 billion of diversified merchandise into Nigeria, whereas Nigeria exports about 5.4. So in terms of balance of trade, the deficit as of 2023 numbers will be about 0.2 billion, which is $200 million. Whilst Nigeria's major export is petroleum, oil, and gas, forming close to 81% of our total export with the US. The US has a diversified export regime into Nigeria. You have cars, you have pharmaceuticals, you have aircraft, you have wheat, which constitute about 24.8% of the top 5 deals with the US. So I will say, looking at this number, 6.8%, if we play our cards very well, is not likely to rupture the boat. The boat may sink, but it won't sink on the basis of 6.8%. Definitely, I believe equilibrium will be restored at some point when both partners, because as we export crude petroleum, the US also exports refined petroleum of about $343 million into Nigeria. So it's symbiotic. But let's even now say, should President Trump decide to go ahead with the reforms, the tariff imposition, the alignment in trade practices, what are the implications? Yes, number one will be that there might be, the renewed attention on franking, which means that there could be potential increase in the value and the volume of oil that US would produce in the market against what we have now. That will have significant impact on the OPEC countries, of which Nigeria is one, and could lead to a reduction in the oil price from the current $69 level that we currently have now. That would be an issue, given that the bulk of our export is petroleum. But we have diversified trading partner, like I said. So then what we need to look at is a realignment in trading partners. Who do we do with? Who substitute? That is one. Another impact could be, it could also be, and then even the reduction in oil price, given where we now stand, the major oil importers would benefit from reduced oil importation cost. So if, like Kevin said, the Dangote arrangement is allowed to pump about 650,000 barrels as projected, and you have all the marginal refiners also, then Nigeria stands to benefit in terms of our balance of trade, which should then largely be positive. And that has a positive impact on our current account balance going forward. In terms of geopolitical realignment, the conflict with China and the projected imposition of tariff on Canada, on all the other countries, could actually be positive for Africa and Nigeria. But the issue is that the countries that will benefit are largely the mineral rich countries, of which we should be one, because we have about 54 different minerals sitting beneath our ground. The issue is how much of that can we bring up, under which structure, under which arrangement, and what benefit of beneficiation, value addition, can we have? The major impact also, right, in covering that quickly, would be in terms of reduction in foreign aids and grants into Nigeria as well as other African countries. But that also presents an opportunity for Nigeria and African leaders to realign, and rather than focusing on grants, to focus on the benefit of intracontinental African trade and harness the benefits of ACTA, which can foster economic development and even take them far where grants can take. A compelling case would be the Malian experience. I mean, you can say, oh, Mali is a troubled nation, but they made a compelling case recently for African self-sufficiency and non-dependence on grants. So Mali decided to repay all their obligations to the international organization, to the multilateral agency, to boost their performance. Uganda is also another country due to social tensions and non-conformity with certain norms, actually got excluded from the AGOA arrangement. And the country has actually tried to operate within that band in order to foster development. And that's the development you're seeing with their GDP growth far above 5%. So if Nigeria also is able to do some form of realignment, should this threat come to be, then we can actually move intra-Africa trade from the level of 13% to well above 20% to begin to rival what happens in Asia, Europe, and even the Americas. So I would say, yes, it could be significant, but it could also be a benefit for Africa and for Nigeria. Thank you.
Right, and definitely, I'm hoping, Dr. Bajimo, that most of these African countries will get rid of that resource curse as much as possible at this time. Thank you so much for that, Dr. Bajimo. Since we're talking about oil, let me bring in Kelvin Emmanuel now. Kelvin, thank you for staying on. So definitely, we've seen, even for this week, we've seen oil prices down to about 3%. So I was looking at Brent and WTI. So we're seeing weakness this week, and definitely for an America first mindset, to this presidency, we're seeing impact coming for the oil and gas industry with Trump. Is all about drill, baby, drill at this point. So Kelvin, talk to me about how all of this will impact Nigeria. We know most of our FX comes from oil at this point, but it looks like prices are weakening. How are you seeing that?
So, President-elect Donald Trump has selected Scott Bessent and has come out with a preview of what he's going to target on the U.S. debt to GDP ratio, his 30-30-30 plan. But the one that is particularly interesting to me is the fact that he's advising President Trump to raise U.S. output for Western Texas Intermediates from 13.3 million, which is where it is, to about 16.3 million. So if you look at OPEC's daily output, members, a little over 30 million barrels per day. Look at the global output for crude oil, close to 90 million barrels per day. If America has 3 million barrels, and then Donald Trump decides to lift the sanction on Russia, the oil price cap on Russia that was agreed in November of 2022 because of Russia's invasion of Ukraine, which I think he will do. There's lobbying, and I'm seeing movement between Saudi Arabia, UAE, and Florida, proxies that are going on behalf of Russia to lobby the US president. I expect that anywhere around Q1 of 2025 is most likely going to raise the sanctions or the embargo on Russian crude. If Russian crude comes back on stream in the market, and Scott Bessent goes ahead to incentivize American producers to raise the production output for WTI, and they add another 3 million barrels, so anywhere around 16.5 million barrels per day, crude oil prices will come down, But then again, if you look at the markets, the question is, what's the incentive to come to Nigeria to produce, considering what I said about recovery ratio, and that is mostly the meat of the issue and the commercial framework. what's the incentive of bringing investments in Nigeria when Senegal is currently producing about 100,000 barrels from 22, 24 oil wells? It started like 6 months ago. Senegal is the most recent producer crude oil within the sub-Saharan West African coast. Mozambique is coming on stream. Total is there. Namibia, I think we achieve first oil sometime in Q1 of 2026. Uganda is going to start doing 230,000 barrels per day in 2025. So what's the attraction to Nigeria? Really? It is a question we have to ask ourselves because, Madam Bajomo talked about how much of crude oil export and gas constitutes our total exports. I'll just tell you, Ladi, NLNG today is currently at 61.5% capacity utilization. It's unable to get, it needs about 3.5 billion SCOF per day to achieve 100% capacity utilization. Currently, it has 2.5 billion SCOF per day. It's unable to get enough gas feedstock. At 100% capacity, Nigerian government is supposed to be getting anywhere around $1.5 billion in dividends. It's currently getting anywhere around $700 million in dividends. How do you get enough FX to give your central bank to do balance of payments and reduce the shocks in the market because demand is higher than supply if you're not able to drill enough crude oil? And even when you drill the little you drill, you're not able to secure it from wellhead to terminal. How do you do it? How do you be able to provide enough gas to your domestic markets? Domestic gas delivery obligation, the pricing issue is an entirely different issue. The pipe to supply the industries in Nigeria is an entirely different issue. The export market is not able to get enough gas feedstock it needs to compress into LNG and LPG and other gases like ethane.
All right.
To export and bring in enough revenue. So for me, I think that the implication of the Trump presidency is that you're going to see more output. Russia is going to come back on stream and is going to influence the price of crude oil down.
All right. Thank you so much for that, Kelvin. Definitely always great having your perspective there. But we're running out of time. At this point, the conversations are so interesting. But let me bring in Faith now to take it from here. Faith, you have the floor.
All right, then thank you very much, Ladi. Thank you for that great session. We have talked a lot about, the American First perspective. We've talked about the looking in the rear, that's looking at 2024 in perspective. So it's time to start to look at what we can look forward to for 2025, right? So what will the Nigerian economy look like? What do Nigerians need in 2025? What can Nigerians expect for 2025? That's what we're going to be looking at in this session. And we're going to keep it short and brief. So pardon me for maybe interjecting if it looks like it's going on for too long because of time. We're really pressed for time. But let me bring in Dr. Bumi here. It's been over 18 months, right, since this administration came into power. Of course, we've seen the US president also, the election happened, so it's going to be sworn in 2025. What should Nigerians expect with regards to macroeconomic policies and improvements for 2025? Dr. Bumi, can you respond to that, please?
Thank you very much. I think for 2025, I would expect the monetary policy direction to continue. I think the central bank governor alluded to that yesterday. The focus is inflation targeting, and that would continue. We expect that the government will continue to use the tool they are using, which is to use the MPR as the anchor to moderating inflation. I have my views around that because I think our inflation also has some structural component. It has some cost pull element, and pricing alone might not solve the problem. So, and we are not in an equilibrium state. Things continue to move. So that is one. The second one will be that in terms of the oil flows, like we've said, I would expect that with the renewed push in America, the quantum of oil in circulation would improve. That would depress the oil price, and that would challenge our current account proposition. It will challenge our balance of payment. it will challenge our balance of trade. But on the converse, reduced oil price with the accelerated refining capacity in Nigeria might then augment and provide a mitigant to the current level of pricing in Nigeria. But we have other logistical issues that might not allow the full impact. Should the imposition of tariff come to be, that would create a different dynamics in terms of the direction of FDI flows, the ability to mobilize diaspora and flows. So the CBN governor yesterday was saying the target is 1 billion of flows on average on a monthly basis. It has increased from 270 million level monthly average, in the words of the CBN governor, to around $600 million in September. Last year, the remittances actually declined by about 3%, but it's projected to increase to 2.3% this year. So depending on what happens in terms of deportation, exodus, then it will tell you whether that proposition will come true or not. The last thing I will say is that in terms of tariffs, if tariff imposition comes on stream, then ultimately the inflationary pressure in the US will increase because of reciprocity, and that might lead to a re-evaluation of the current interest rate regime, which might then also still lead to capital immigration and capital flight, further depressing the ability of Nigeria and other emerging economies to mobilize diasporian flow. So I will say, in terms of what we should be focusing on, we should focus on ability to boost our trade, add value. Look at the proposition around mining, which is giving a lifeline to a number of our East African brothers, Southern African brothers, and even across West Africa. We boast of about 54 minerals that are waiting to be tapped. We need to find credible partners like our neighbors have done, Guinea with the Simandou project, Liberia with ArcelorMittal. Yeah. We need to find our own Ivanhoe and their likes and bring the mining proposition so that if there be any attrition in oil and gas, we can have something to fall back on. The agro-allied proposition is also a compelling case, but we need to encourage the exporter in place of the bottleneck imposition of tariffs. We need to embark on aggressive trade facilitation to be able to reduce the cost of exportation and to make exports seamless. Right now, it's not seamless for a number of manufacturers. The government really has to look at that. Another thing that I see that the government needs to focus on is our land trade corridors. So if you look, I live in Lome, and I travel through land borders into Nigeria. It's seamless until you get to Nigerian border. And then what welcomes you is this magnitude of trade, but being done in a, pardon my use of word, very filthy environment. Is the dirt along the road that welcomes you. I think that needs to be targeted immediately and improved so that even the land trade can flow, because a number of intra-African trade are happening through the borders. So we need to focus on that. I know we are mindful of time, but let me stop there for now. Thank you.
Thank you very much, Dr. Bumi. I mean, there's so much that we still need to cover, but unfortunately, we do not have the time to take all of that. But it's been an interesting session so far. And I'll hand it over now to Joanna for the Q&A and, of course, to wrap up this session as well. Thank you. Joanna, you have the floor.
Yes, thank you very much, Faith. An excellent job there. And of course, a lot of insights. Our time is fast spent. I'm going to try and take a couple of questions. Dr. Bumi, please stay with us. This first question is coming to you. You have said quite a lot, especially about CBN policies, right? And there's this question here from Isia, Dr. Bumi Bajomo. If you can hear me, please. Can the central bank's FX policy in 2025 continue to support the stability of the Naira, or should we expect further adjustments? And he goes on to ask about the risk. What are your thoughts on this, Dr. Bumi?
Like I said, the CBN policy direction is clear, and it would continue. They would continue to use the CRR and the MPR to direct how we go in terms of ability to tackle inflation. But the issue is, how effective would the ability to bring down inflation be? I think the CBN definitely would have to look for other alternatives and other avenue or other mechanism to support this interest rate targeting. In my view, interest rate alone will not solve this problem. We need to look at other parameters. We need to look at, okay, I know they've removed intervention funds, they've removed support, but you know, in other climes, there are targeted intervention to specific sector. So let's take agric. The government does not throw money. Before now, Nigeria was not an economy where people rely on grants and aid. Nigerians are hardworking people who want to eke living, doing tangible things. So what the government needs to do is what has been done in other countries, like effectively, instead of throwing money and putting subsidies out there, in Zambia, what the government has done is, for everybody who is producing in the agri sector, the government is supporting the subsistence farmer, but they don't just throw cash at them. They contracted companies, credible operators, provided the farmer is able to bring 40% of their input requirement. The government balances 60%. What that does is it ensures that government subsidies or support or intervention are not social in terms of 5,000, 80,000 handouts. They are targeted into what can improve the productive base of the economy. If you augment the productive base and people produce more, the cost of production ultimately will come down and inflation will be moderated. So I expect the policy to continue, but to be modified, to reflect our own dynamics and our peculiarity as a nation, not just straight from the textbook or as our lenders want them. We need to modify them.
Yes, there's a lot of context that needs to be considered, as you've said, when it comes to policy, and it goes beyond policy, right? There's a fiscal side of things. Thank you so much, Dr. Bumi Bajomo, for that. I believe we still have Amanda with us. Amanda, are you there?
Yes, I am.
All right, great. So, I mean, there's a question here on how Nigeria's growing debt burden, the budget, we've seen it, the deficit, we've seen it. There are questions about how this will impact economic growth prospects. And of course, it has been said in this conversation, you know, your negotiation power is a lot, and there's a lot that's going to be considered when you're negotiating. So, I mean, what are your thoughts on this and our economic growth prospects, the power we have to negotiate with perhaps a new administration of one of the strongest economies in the world? Your thoughts on this, please.
Very good question. I also learned a lot from the potential value that Nigeria can bring to the table just from the panelists, the discussion earlier. I think that there's a focus for a lot of people ask questions about what is the trend of the currency exchanges. I think fundamentally, the US dollar also have a tendency to strengthen when the gap between the US economy versus the other economy that widens. And many of the United States or American research firms predict that the US would be on track to continue to grow, and then the other global economies right now apparently seem to be on the current trend. Well, the prediction be US would further grow, accelerate growth. So I think at this point of time, and Nigeria, in terms of coming to the negotiation, think about learning about what's in the mind of the government of the United States is super important. I think, given the track record of the Trump 1.0, I think the security would definitely, national security coming to the mind. How could Nigeria and overall Africa contribute to the global security as well as the security of the United States?
Yeah.
I think that is something that would come to the table as valuable. Number two, I think it is a lot of panelists have talked about the natural resources. That given the current fragmentation of the geopolitics, I think that undoubtedly that a lot of businesses and then would want to invest in the countries who are resource rich, like Nigeria. The third part is about, very importantly, I think many of the panelists have already addressed, is the business environment, because that would fundamentally help to drive the investment. When you have investment inflow, and then would naturally strengthen the local currency, because the US dollars will be exchanged to the local currency and then to drive the local business investment. I think those three would be something fundamental, but also easy to say and harder to do. But I think those are the fundamental elements we should consider.
Yes, I mean, definitely, indeed. Policies, policy consistency, and enabling business environments and investment environments, that will definitely strengthen any nation's negotiation power. But thank you so much for those insights, Amanda. Definitely a lot of value. Africa, Nigeria has a role to play, and bringing value when it comes to negotiation. Thank you so much, Amanda, for that.
Absolutely.
Very quickly, we want to know how we can multiply our money. We have AG with us, and of course, he has shared quite a bit. But I'll come to you now, Seji Akpata. When it comes to investments, we know that you cover a lot, from real estate to the capital markets and all. What are some of the prospects? What sectors do you see doing very well next year? There are a number of listings lined up. How do you see the equities market doing? And of course the fixed income side of things with the policy direction at the moment.
Thank you for that question. I think a number of things to bear in mind. We have very, very high risk-free rates right now. The rate on the one-year treasury bill is over 30%. And some people might be best served just investing in treasury bills only and not really bothering with anything else. Because given where the Naira is now, are we likely to lose 30% in the value of the currency in the next 12 months? Probably not. And so Naira investment in fixed income is probably looking very attractive for next year. In terms of the equity market, timing of entry is very important in this market. There's still a lot of value in the bank stocks, just by size of their dividends, their dividend yields, and that is probably something worth looking at. It's always good to get dollar exposure, either via Eurobond funds, for those who are really sophisticated. If you can invest in US indices, S&P index, or ETFs, that will be helpful. But I think a diversified portfolio is always good. But right now, risk-free at 30% looks like the hottest deal in town.
Oh, it's risk-free, play safe. That's what you're pushing. But I'm sure there are those who also have higher risk appetites and may want to play around with getting returns in other markets. But thank you so much for those insights, Mr. Akpata. It's been a very insightful session. A huge thank you, I have to say, to all our speakers. So many perspectives, so many angles, and I believe that they will and should equip you. Hopefully you were taking notes, but not to worry if you weren't. This session we made available on YouTube, Nairametrics YouTube channel. There's a lot of information, metrics, conversation going on Nairametrics YouTube, so you need to subscribe and put on your post notifications so that you're the first to know. Time is of the essence when it comes to making some of these moves. But again, a huge thank you to every single one of our speakers today, Mr. Akpata, Amanda Wolverton, the Calvin Emmanuel, and yes, of course, our keynote speaker, we had Madam Margaret as well. We had Bumi Bajamo, amongst others. We had Dr. Olusha. I can't leave anybody out. Dr. Olusha Gomishak here as well. Thank you so much for the time this Saturday morning, now afternoon. The session has come to a close. Our participants, you have been amazing and engaging in the chat box. Sorry if we didn't get around to answering all your questions, but engagements continue across platforms. Nairametrics, we're here to keep you up to date with all the metrics, all the insights when it comes to the economy, financial literacy. So make sure you're following Nairametrics. So many programs. This has been the quarterly webinar that we do, economic outlook that we do for Q4. So we do this quarterly. So, but there are others that we do on a monthly basis, industry outlook, zero in on particular industries. We have spaces on X that we do twice a week. There's so much happening. It's fast paced. So there's a lot that we do in between to make sure that we are up to date with it. So you want to make sure you're following across platforms so that you're the first to know and follow. I think I'm going to hand over to the founder CEO to give the final thanks and closing remarks as we tie today's webinar to a close.
Yes, Joanna, thank you so much. And thanks everyone for such a very instructive webinar. I have my jotter full already with a lot of stuff that I'm going to chew on. Of course, if you miss any part of this, this webinar, maybe you want some nuggets that you may have missed, please just log in to follow us on any of our social media channels, particularly our WhatsApp channel. We have all the major talking points in there, so you can always go there and call them. Of course, you're going to see a lot of articles from this particular webinar on Nairametrics website as well, and you can always get them. Of course, the discussion continues. We're not stopping here. I'm going to discuss this on my radio show on Monday as well. Follow the Money happens on every Monday, 8 to 8:30 on Classic FM 97.3. Of course, follow us across all our YouTube. Follow us on our YouTube channel at Nairametrics, where we do have a lot of insightful videos for you as well, whether it's financial literacy, whether it's on the economy, or whether it's me breaking down things on my money brief. Expect to see them as well on our YouTube channel. Thank you so much, everybody. I know it's been a very busy Saturday, 12 o'clock. A lot of people need to get to things, so do have, like I always say, a profitable week ahead. And thank you so much, our amazing panelists. God bless you all. We've been chatting already on our WhatsApp group here. We'll continue that chat as we go on. Thank you as well to the organizers at Nairametrics. You guys did a fantastic job, every single one of you. I can't start to name names now, but good job. Well done, everyone. Thank you so much, and see you again next time. Goodbye.